This is In the Final Analysis. I'm Jim Yockey. So January blew in, bringing with it some ill will in the marketplace, which we were all concerned about. But now January's over. We're back to normal. 2022 is going to be different. I specified this when I sent out the white paper about this time last year. If you need a copy of that, just write an email to info@wisdomchoice.net and we'll send it to you. But in the final analysis, when we look at what the market is telling us, that they enjoy taking profits, they enjoy having volatility in the marketplace because that gives more trading opportunities. What that means to us is the trend has changed. We're no longer in a trending market. As a matter of fact, stock pickers are going to be in vogue in 2022 and maybe even beyond that. But there are a few things that we need to think about, and that is inflation, taxation, all of those normal things that you would think about. You know, what's the government going to do? What's the global situation going to be like? All of those things are important for us to consider. But let's drill down on those things for just a minute. In terms of inflation, we all know, based on our own experiences, that supply chain has had an effect on marketing for retailers, getting products. The ships in the harbor can't be unloaded, the truckers that can't get things out to the marketplace. All of those things are significant, and they bring about problems of pricing. Prices are going up because supply is restricted because of the supply chain. So is inflation going to stay at the level of 6.5%, 7%? No. It's going to come back to a more normalized level. It just takes time in order to do that. Let's talk about the economy. The economy is just bursting at the seam. Everybody that has a job is working and spending money. There are 4.5 million jobs out there that are seeking employees and can't find them. Well, that's going to change. When the government money runs out, there are going to be a lot of those people that say, hey, I think I will take a job. What they're really going to find pleasantly is that their salary or their wages are going to be higher than what they expected previously. Of course, we're going to have problems like childcare and our kids going to school, not going to school. What about masks? All of that attributable to Omicron and this continuing pandemic are going to have an effect on us, but we can manage around all of that. The hard stuff is probably already done. When you look at markets as being somewhat related to the economy, the markets are booming too. Will rates of return exceed what we enjoyed last year in the overall markets? Probably not this year. And as a matter of fact, they may slow down to a single digit for the year. Let's hope it does better than that, but still not bad. We can live with it. What about interest rates? Well, we've known for a long time interest rates were going to have to go up. We shouldn't be surprised at it. Now, how fast? It would be unlikely that regulators would raise them so rapidly that it would put us into a recession. So that's just not in the cards, I don't think, for this year. Sure, if you're going to buy a new house or take any other kind of debt on, but if you're a saver at the bank, you're likely to get more money for your deposit. Well, what about politics and geopolitics? Yes, those are in the headlines every single day, and they are troubling. That kind of uncertainty we live with. It's part of life. We will have to analyze it and decide what we need to do with our portfolios and investing and our attitude and our level of risk that we can take. Yes, that's true. But when you look at this country, our political parties are so far apart. The chances of them agreeing on pretty much anything for the next couple of years is questionable. Geopolitics, yes, there's China, but China has their own problems. They've lost a lot of businesses in China to other countries like Vietnam and Thailand and whatever. So they have their own issues to deal with, and I doubt seriously if they're going to be too much on our radar screen for the balance of this year. Russia, Putin's doing what Putin does. He is raising a furor, and we could see, but that's something to watch for. But that's part of the uncertainty that we have to live with in 2022. So, what are a couple of things that you need to really pay attention to and probably take action on? If we're no longer in a trending market, then you want to consider stock picking. And one of the ways to do that is to move into mutual funds or whatever. If you've been in something like exchange traded funds or something like that, you might want to think about how can I hire money managers that will actually pick stocks for me in a stock picking marketplace. Number two, with regard to interest rates, you still have a problem, at least for the time being. Bonds are just not attractive. I mean, why would you lock your money into a 1.8% 10-year treasury and have to wait for it in a rising interest rate environment, which means that if you have to sell early, you might get back less than what you put in. The reality is that things will be gradually moving back to a more normalized pace, and you can make conscious choices about how you want your money to be managed. Thanks for tuning in to the final analysis. We try to keep you informed. Be sure that you're on the email list and call us if you have any questions whatsoever.